Hey everybody, welcome back to Finance Friday. This is a special edition of Money Girl where I answer your burning money questions each week. I love getting your questions, so please keep sending them. You can email them to me. You can send them on a voicemail. I'll give you a little bit more information about that in just a moment. But today we're going to cover a topic that didn't come from one particular listener, but it's a common question that I often hear. It's something similar to the following. Something like, my financial situation has recently changed, or I have some complicated money questions and probably need to consult a financial professional. How do I know if I should hire a financial advisor? And where can I find one that's right for me? So, whether you just received a windfall, maybe an inheritance, or even more money at work, like a work bonus, or you've got new financial goals because you're starting a family, maybe you're opening a business, going through a divorce, or just want to make sure you're on target to retire soon, you can benefit from working with various financial advisors. This podcast will review the main types of financial advisors and tips for finding and hiring the right ones. Welcome back, everyone. This is episode 952 of Money Girl. I really appreciate you spending time with me and downloading the show. If you're new here, I'm Laura Adams, an award-winning author, an on-camera spokesperson, a money speaker, and founder of The Money Stack. That's my Substack newsletter. You can learn more, ask your money questions, and sign up for The Money Stack when you visit lauradadams.com. If you want to email me, you can start by visiting lauradadams.com, or you can leave a voice message with your question or comment by calling 302-364-0308. I'd love to feature your question on the next Finance Friday, which, as I mentioned, that's our weekly Q&A bonus edition of the show. All right, so let's talk about financial advisors. I think there's a lot of misconceptions about them. Many people think that only wealthy people need financial advisors to help them invest their multi-million-dollar portfolios. Well, there are different types of professionals that can help you with tasks like setting up retirement accounts, optimizing taxes, protecting your assets, making business decisions, creating emergency documents, and investing, regardless of your income or net worth. So we'll go through 7 types of common financial professionals that you should be familiar with. Number 1 is a banker. A personal banker is an employee of a bank or a credit union, and they can help you with a lot of things like choosing the best accounts for earning higher interest, getting a loan, or investing for retirement with their institution. And commercial bankers can help you open a checking account or get a loan or line of credit for your business. The compensation for bankers is typically a base salary plus bonuses or commissions for meeting certain targets like the number of new checking accounts and mortgages they open or originate. While bankers can certainly be very helpful, remember that they are incentivized to grow their book of business by keeping your money with their institution. So don't overlook other types of professionals that you may need and the types that we'll review here who can also help you achieve financial goals. The second type of financial professional is an insurance agent. Insurance products like auto, home, renters, life, disability, and health plans must be purchased through licensed firms and their agents who are regulated at the state level. Now, some agents will work as an employee of just one company, and others are independent brokers. They're going to sell policies from multiple insurance companies, and they typically work on commission, which is paid by the insurance company, not you. Most agents specialize in a line like selling property and casualty policies or life and health or business policies. Right now, I use a local insurance agent for my auto, homeowners, and umbrella liability insurance. And I'm using somebody locally so I can quickly email or call them with questions or make any needed policy changes. But I've often used online sites and marketplaces for life, disability, and health insurance since I don't necessarily need a relationship with a specific company or person for those products. They can make it easy to compare policy premiums and benefits. However, you might find a life and health insurance broker useful, especially if you need assistance enrolling in a health plan or applying for Medicaid or Medicare. You can do an online search for a local broker or ask for recommendations from family and friends. Having too little insurance is risky, but it's expensive to be overinsured. So make a habit of shopping around to get affordable coverage that minimizes your potential risks. If you have insurance questions, most brokers will consult with you free of charge in hopes of getting your business. The third advisor or professional is a tax accountant. There are different types of tax pros with varying levels of education and qualifications who can give you advice, assist with retirement planning, prepare financial statements, and file taxes. The tax industry is regulated through a combination of federal oversight by the Internal Revenue Service, or IRS, and state-level agencies. A common designation is a Certified Public Accountant, or CPA. They're licensed and regulated by their state board of accountancy. They must have extensive education, pass a rigorous uniform exam, and adhere to a strict code of professional ethics. They can offer many services, including preparing tax returns for individuals and businesses, providing planning advice, and representing you before the IRS in an audit. Another option are enrolled agents, or EAs. These are federally licensed tax practitioners who must pass an IRS exam. They can prepare tax returns and represent you before the IRS. And there are people who are just tax preparers. They help you file tax returns, but they may not have any credentials other than voluntary education. If they complete an IRS program, tax preparers can represent you in limited situations. And tax attorneys. These are lawyers specializing in tax law in their state who are uniquely qualified to handle complicated disputes, represent you in tax court, and provide legal advice. So if you have a straightforward tax return, using an EA may suffice. However, for more complex issues like business interests, rental property, self-employment, or tax planning, I recommend using a CPA with experience in the type of work or advice you need. A CPA's fee usually depends on the complexity of your situation and the time it takes to research it or complete a tax return. In some cases, a good CPA can save you more money than they charge by helping you legitimately reduce taxes. The IRS has a tax preparer search tool, and I'll put a link to that in the notes for the show, for locating tax preparers near you or verifying the type of credentials held by a specific tax professional. As with most professionals, getting recommendations from satisfied family and friends is an excellent way to find a good local CPA. All right, the fourth type of professional is an estate attorney. An estate planning attorney specializes in helping you plan for the distribution or management of personal and business assets after your death or in case you become incapacitated. They create a customized strategy based on your wishes, and they draft legal documents like wills, trusts, powers of attorney, and healthcare directives. Every adult should have a basic estate plan in place, especially if you have minor children, a blended family, or specific wishes for your healthcare or end-of-life care. However, the larger your estate, the more you can benefit from strategies to reduce taxes, help your heirs bypass probate, and protect your assets. You can research potential estate attorneys online and ask your network for recommendations. Then verify their credentials with your state's bar association. And I'll put a link where you can drill down to find your state's bar association and take advantage of any free consultations to assess their communication style, expertise, and their fees. Okay, the fifth type of professional is a stockbroker. Now, the primary responsibility of a broker or an investment broker is to make recommendations that are, quote, suitable for you based on your financial situation and goals. For instance, if you want to buy a particular security when prices are low and sell when they're high, a broker would earn a commission by making those trades on your behalf. For instance, if you buy a mutual fund, the advisor may get paid directly from the fund company, or a mutual fund may include a load or a fee that gets deducted from your investment account and paid to the advisor once you purchase it. Since commissioned advisors only get paid when you buy a product, they typically offer free investment advice. However, be aware that they are not fiduciaries. While you need to be cautious anytime you work with a commissioned salesperson, paying a commission for a product doesn't necessarily mean it's a poor choice or not in your best interest. What's important is to ask an advisor how they get paid and understand if there's a potential conflict of interest. Why are they recommending certain products? Is it just because it pays a high commission? Brokers are regulated by the Financial Industry Regulatory Authority, or FINRA, FINRA, and you can do a background check on brokers at finra.org. The sixth type of advisor is a registered investment advisor, or RIA. Now, unlike a broker, an RIA is a fiduciary. That means they're legally obligated to act in your best interest at all times and disclose conflicts of interest. They typically act as an ongoing advisor, creating a long-term financial strategy and plan. An RIA must ensure that the investments you buy and sell are consistent with your long-term goals and financial objectives. RIAs are usually fee-only advisors, charging a percentage of assets under management, or AUM. Fee structures vary by company, but they could range from 1% to 3% of the total value of your portfolio, and that percentage should go down the larger your portfolio. For example, if you have a $100,000 portfolio, a 2% fee means you pay $2,000 yearly for their management and advice. That gives an advisor an incentive to grow your portfolio value. Other advisors may work exclusively with clients to create financial plans, and they may charge a flat fee or even an hourly fee, ranging from a few hundred or even a few $1,000s. RIAs are regulated by the U.S. Securities and Exchange Commission, or SEC, or state securities authorities, depending on the size of the firm. You can check an RIA's background at advisorinfo.sec.gov. And again, I'll have links to all of these in the notes for the show. And the seventh type of advisor is a certified financial planner, or CFP. This is a professional certification for individuals who must meet rigorous education, examination, experience, and ethical standards as set by the Certified Financial Planner Board. A CFP may also be an RIA, but not all RIAs are CFPs. CFPs are trained to help you manage finances through a comprehensive approach that integrates all areas of your finances to achieve your life goals. They create a detailed financial plan with actionable recommendations and points to review your progress. CFPs are paid in different ways, including commission only, fee only, salary, or a combination of these methods. In general, a fee-only planner may give you more objective advice since they're not incentivized to recommend a particular investment or insurance product. Advisors who blend the commission and fee-only models are known as fee-based. They may charge a percentage to manage your portfolio and also sell investment products on commission. Now, there are other excellent credentials out there for financial advisors, such as a Chartered Financial Analyst, or CFA, which requires professionals to pass exams covering investing, accounting, professional ethics, economics, securities analysis, and portfolio management. But a CFP is certainly the gold standard that I recommend for an advisor. And you may find that a CFP has other designations as well. They can create a one-time financial plan for you or work with you on an ongoing basis. A great place to start your search for a CFP is letsmakeaplan.org. This is a site run by the CFP board. It's a nonprofit organization that sets and enforces standards for certification. So I want you to realize that there are a lot of different financial advisors out there, and you certainly may need more than one. Which type of advisor is best for you depends on factors like how much you have to invest, the products you want or need to buy, and the services you need, like investment management, business advice, or tax preparation. Some investment advisors only work with high net worth individuals or even pre-retirees, but many accept clients with smaller portfolios. To find the right advisor, I always say it's great to get a recommendation from friends or family, but you can also visit the National Association of Personal Financial Advisors, their website, and the Garrett Planning Network. Again, I'll have links to these. They help you search for and verify the credentials of certified fee-only professionals in your area and nationwide. What's important is that you understand an advisor's level of experience, their legal obligation to protect your financial interests, and their method of compensation. I recommend having a virtual or in-person meeting to ask any type of financial pro or advisor the following questions before you work with them. You may want to say, what services do you offer? What's the range of your services? What are your professional certifications? How do you make money? Are you a fiduciary? Are there times you don't act as a fiduciary? Do you have any account minimums? What's your approach to financial, estate, or tax planning? What information and documents do you need from me to get started? How often will we meet? And are you available if I have questions? So I hope this has been helpful, or at least a place to start if you're wondering if you need a financial advisor. Certainly, I think having a conversation with one or two is a good place to start. Asking for their advice about your situation, seeing what free advice you can get up front, and how well you communicate, how you want to have a good relationship with anybody that's dealing with your finances. So making sure there's a good rapport. You feel like they're very knowledgeable in their area of expertise. And asking them, how long, have you been doing this? And, what are your typical clients like? Am I like your typical client, or you only dealing with people who are different from me? So feeling them out first and then deciding if you need an advisor, I think is the best way to go. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast. We've got a great team I want to thank. Steve Rickyberg audio engineers the show. Holly Hutchins is our director of podcast. Morgan Christensen is our advertising operations specialist. And Nathaniel Hoops is our marketing contractor.